Good morning. Here is today's Korean economic news briefing. The Korean economy is currently navigating a complex landscape, grappling with escalating global uncertainties stemming from the prolonged Middle East conflict, alongside domestic challenges such as rising national debt and persistent inflationary pressures. The government is actively engaged in deploying various measures to stabilize prices and support economic growth, even as critical policy decisions loom on the monetary and fiscal fronts. Our top story today focuses on the intensifying inflationary pressures. Vice Prime Minister Koo Yoon-chul has warned that the Middle East conflict is making inflation a tangible threat, with concerns growing about a potential slowdown in consumption. Oil prices are now nearing an alarming $110 per barrel, pushing gasoline prices in Korea sharply upward to the 1,900 won per liter range. Even more critically, naphtha prices have doubled in just 2 months, sending shockwaves through various industries. This dramatic surge directly impacts the cost of raw materials for essential goods, from packaging to construction materials, signaling a broad-based increase in production costs. To counter these supply chain bottlenecks and inflation, the government is considering a supplementary budget and regulatory easing. Directly reflecting these supply chain disruptions, the government is also taking urgent steps to secure essential medical supplies. Due to the Middle East conflict's impact on oil prices and the instability in petrochemical raw material supply, there are concerns about production shortfalls for critical items such as surgical gowns, drapes, and medical waste bags. In response, the government plans to prioritize the supply of raw materials for these medical necessities to prevent any health-related crises. This highlights how geopolitical events can quickly translate into tangible impacts on daily life and essential services. The ripple effect of surging naphtha prices is also profoundly felt in Korea's thriving K-beauty industry. Smaller and nascent companies, in particular, are facing a naphtha emergency, struggling to secure essential raw materials for cosmetic packaging components like tubes and bottle caps. Major firms are reporting a 15% increase in raw material and component costs, with original design manufacturing (ODM) companies indicating that price adjustments will be unavoidable if the situation prolongs. This paints a grim picture for the K-beauty sector, especially for smaller players who lack the negotiating power of larger conglomerates. Turning now to Korea's fiscal health, the nation's debt has, for the first time, surpassed the 1,300 trillion won mark in the 2025 fiscal year, reaching 1,304.5 trillion won. This means each citizen's share of the national debt has increased by approximately 2.8 million won in a single year, now standing at around 25.5 million won per person. The management fiscal balance recorded a deficit of 104.8 trillion won. According to the Ministry of Economy and Finance, this increase was primarily driven by the 2025 shocks, including domestic demand contraction following the aftermath of martial law and abrupt changes in the global trade environment originating from the U.S. In response to these challenges, the government had to implement 2 supplementary budgets, contributing to the rise in national debt, which now approaches nearly 50% of the GDP. This places a growing burden on future generations and raises concerns about long-term fiscal sustainability. In monetary policy, the Bank of Korea's Monetary Policy Committee is set to hold its final meeting under Governor Ri Chong-yong's current term on April 10. Experts widely anticipate that the benchmark interest rate will be frozen at 2.50%. The consensus is that the central bank will likely adopt a wait-and-see approach, monitoring the prolonged impact of the Iran conflict on oil prices, inflation, and the broader real economy. However, there's a notable increase in market forecasts for a potential interest rate hike later in the year, possibly as early as July, driven by persistent inflation concerns and the hawkish stance of the U.S. Federal Reserve. The global economic calendar this week further underscores market uncertainty, with the release of Samsung Electronics' first-quarter earnings, the U.S. FOMC minutes, and crucial U.S. inflation and GDP data, all of which will significantly influence future monetary policy directions. The triple highs of high exchange rates, high interest rates, and high inflation continue to exert pressure on financial markets. The high exchange rate, with the won trading around 1,500 against the US dollar, has reportedly prompted Korean retail investors, known as Sehak Gaming, to net sell US stocks. Efforts like the new Domestic Market Return Account, RIA, are being closely watched to see if they can effectively encourage overseas investment capital to flow back into the domestic market. Meanwhile, the bond market is experiencing mixed signals. Fear of a potential U.S. interest rate hike has led to a significant outflow of funds from bond-type funds, with a net outflow of 2.7 trillion won in just 1 month. Yet, some individual investors are paradoxically turning to short-term, low-coupon government bonds as a temporary safe haven amidst stock market volatility. On the equity front, the Kospi index closed up over 1% yesterday, buoyed by institutional buying and strong performance from major players like Samsung Electronics. However, the KOSDAQ suffered a decline, primarily due to weakness in biotechnology stocks, illustrating a divergence driven by sector-specific dynamics and investor sentiment. Moving to industry trends, the surge in oil prices is paradoxically fueling the electric vehicle market. EVs accounted for nearly half of imported car sales last month, leading to an optimistic outlook for Korea's three major battery manufacturers: LG Energy Solution, Samsung SDI, and SK On. However, the landscape is not without its complexities, as evidenced by Japan's new EV subsidy policies that favor domestically produced batteries, creating a challenging environment for foreign battery manufacturers. In a bid to bolster energy security amidst the Middle East crisis, the government has also restarted Gori Unit 2 nuclear power plant, which had been offline for 3 years. This move is seen as a crucial step to alleviate energy price burdens. In the rapidly evolving realm of artificial intelligence, the Ministry of Employment and Labor hosted the APEC Future of Work Forum, discussing strategies to address job changes brought about by AI. The consensus leans towards shifting the paradigm of employment policy from merely protecting jobs to maintaining employability in the AI era. Major investments are also underway, with Hyundai Motor Group announcing a 9 trillion won investment to build an AI and robotics advanced industry ecosystem in Saemangeum, exploring various funding avenues including a national growth fund. Further showcasing the expansion of AI infrastructure, LS Electric has secured a 106.6 billion won contract to supply ultra-high voltage transformers to a U.S. big tech data center, highlighting the booming demand for stable and efficient power solutions driven by AI. Optical communication stocks are also experiencing a surge, recognized as a critical infrastructure component for the AI industry. Finally, in real estate news, financial authorities are tightening lending regulations for multi-homeowners. Starting April 17, loan extensions for apartment owners with multiple properties in the metropolitan area will be blocked, with limited exceptions for existing tenants. Further regulations are expected for non-resident single homeowners, debt service ratio, DSR, and residential mortgage risk-weighted assets, RWA. These measures aim to curb household debt and stabilize the housing market. Meanwhile, Seoul's Jaeons, or lump sum deposit lease, market continues to show volatility, with transaction volumes in March remaining high while available listings decreased significantly. This scarcity and rising Jaeons prices are pushing some residents out of Seoul, contributing to price hikes in surrounding Gyeonggi province. On a related note, there's growing interest in senior residences, fueled by both Korea's rapidly aging population and the government's anticipated property tax reforms targeting high-value and non-resident single homeowners. To summarize, the Korean economy is facing substantial headwinds from global geopolitical tensions and their inflationary consequences, coupled with the ongoing challenge of managing a growing national debt. While industries like EVs and AI infrastructure show promise, policy responses are critical to mitigate risks and foster sustainable growth. For investors, the current environment necessitates caution. The triple highs suggest continued market volatility, particularly in equities. While there are opportunities in sectors benefiting from energy transition and AI infrastructure, the general trend points towards a search for safe havens, as seen in the mixed signals from the bond market. For general viewers, the immediate impact will be felt through the rising cost of living, from fuel to daily necessities, and potentially tighter credit conditions for housing. The government's supplementary budget and targeted supply chain interventions aim to alleviate some of these burdens, but sustained vigilance and adaptation will be key. That concludes today's Korean Economic News Briefing. Thank you for joining us.